We have not seen an era without federally introduced spending, without federally introduced forms of quantitative easing since the great financial crisis. So we have been propping up our economy for 14 years straight now. So we have distorted the prices of bonds and fixed income. We've distorted the prices of equities. We've created an asset bubble in crypto out of nowhere. And now we have to do the hard work of figuring out what the real supply demand is in the economy.
According to data from the U.S. Bureau of Economic Analysis, the U.S. economy shrank by 0.9% in the last 3 months, marking the second consecutive quarter of economic contraction for the U.S. In the first quarter of 2022, U.S. gross domestic product decreased at an annual rate of 1.6%. In more technical terms, 2 consecutive quarters of negative growth is considered a recession, but policymakers have pointed out certain nuances that make the current economic situation unique. According to Treasury Secretary Janet Yellen, it can't be a recession when almost 400,000 jobs are being created monthly. Regardless of the nuances, however, there is no doubt that the U.S. economy has weakened, and we may be facing a lot of uncertain times ahead. In a recent episode of the All In podcast, the team takes a look at some of the nuances while attempting to give a simpler answer to the question on everyone's mind: is the United States now in a recession or not? In their usual rather informed and practical approach, venture capitalist Chamath Palihapitiya and David Sachs, entrepreneur and investor in internet technology firms, attempt to answer this important question and explain the factors that led to such severe economic decline. Please watch, like, and share this video. Drop your comments and observations in the comments section below and subscribe to the channel. Thanks, and enjoy the video.
GDP fell by 0.9% in Q2, marking 2 straight quarters of negative growth.
So just taking a step back, if you go to the Bureau of Economic Analysis, which is an official website of the government of the United States that posts GDP, the title makes it pretty self-obvious what we're dealing with here, which it says, Nick, you can put it up there. Real GDP, the percent change from the preceding quarter. So things can still go up positively, but still be negative if it doesn't go up by the same or more than the quarter before it. The thing that we really have going on is that over the last 8 quarters, we've had all kinds of very turbulent data that's made the trend line unpredictable. And the most obvious way to see this is actually in one specific subsector, which we'll get to in a second, which is around US e-commerce adoption. You see this one huge spike coming out of nowhere. And then eventually everything has settled back to trend. The same way, I think what we're waiting to figure out is how many quarters does it take for us to get back to on-trend growth in the economy. We had a massive shortfall in Q2 of 2020. We had a massive surplus in Q3 of 2020. We've had a country that's been getting back to finding equilibrium over the last 5 quarters. So we don't really know what the steady state growth should be. This is why I specifically had such an issue with the tone the White House took, which was trying to explain away that this isn't a recession by trying to create doubt in the definition. Instead, I think it would have been much better off just repeating what I just said and explaining basic statistics and actually showing that the country is headed in the right direction, largely speaking, from a really crazy one-time externality that nobody could have predicted. That it's going to take some number of quarters. And so really what you should look at, and Jason, you've pointed to this, is employment and wages, and try to be a little bit more circumspect in overreacting to any one quarter of data. By the way, the Fed exactly just said the same thing yesterday when they raised 75 basis points. They said, we are not going to give guidance anymore because things are too turbulent. We're going to remain vigilant on inflation, but mostly we're going to be very near-term data dependent. So I would boil all of this in saying, let's not overreact to a quarter's print here or there, and specifically the label. I think the White House made a mistake in trying to basically think, we all didn't understand what a technical recession was. I think instead we should just focus on what we have to do to get back to solid state equilibrium.
The big news this morning is that we no longer know what a recession is. This is such a vast and complicated question. you might as well be asking, what is the meaning of life? Now, I remember in the days of Republican presidents, we had a very simple definition of recession, which was 2 quarters of negative GDP growth. But now that we have a Democrat in the White House, we just can't know these things. Why even ask such difficult questions, right? I mean, that's basically the media coverage today, and it's absurd. I mean, and you saw for the last week, the administration and its spokespeople have been trying to muddy the waters on the definition of a recession. And it was laughable as they were doing it. But now you see the media coverage today and you realize like they've bought into this nonsense and they're carrying so much water for the administration. Look, the headline should be the Biden recession has begun. That's it. We're in a recession. He's the president. And if we had a Republican in the White House, it would be Republican president recession has begun.
Yes.
So the media here is carrying so much water to try to avoid the obvious headline. I just explained it. Instead of reporting the obvious headline, they're now saying that we're approaching recession or we might be in recession. Or we have all these difficult technical issues. Listen, we're in a recession. It started. It might be a shallow recession. We don't know yet.
Yeah.
It's a recession in which the unemployment rate as of today is low, although the labor participation rate is also low. So listen, we're at the beginning of a recession. It might turn out we might have a bounce in Q3. This might be more of a double dip. I suspect that's what it'll be. But we know the cause of this. The cause of this recession is inflation. If you look at the economy's growth in nominal terms, it grew at 7 point something percent. But because inflation was at 9%, you have to subtract them in real terms. The economy is shrinking. And who is to blame for inflation? Well, Jay Powell at the Fed, because he reacted way too slowly, but also the Biden administration for all the spending they did.
How much sooner do you think they could have reacted? 2 quarters? Maybe?
No, like 9 months earlier.
So 3 quarters.
We got that first surprise inflation print last summer. It was May, I believe, that 5.1%.
We started to talk about 10-year break-evens tips in May of last year.
Yeah. So they could have gone quarter or two.
No, the 9 months. And they continued. Not only did they not raise rates or signal any desire to raise rates for 6 months, they continued quantitative easing for 9 months, which just makes no sense. But they should have taken their foot off the accelerator right away.
Not 9 months. They only stopped in June of this past year. So we've only been quantitatively tightening for 2 months.
I thought they stopped the bond buying program in March.
Maybe that's right. Yeah.
Yeah. But they stopped quantitative easing in March. But you're right. That tightening is just something they're getting started with. But the point is they should have stopped easing, right? Like, why would you need to keep intervening in the markets to buy more and to basically push out more money?
This is a chart of the percent change in real GDP from the preceding quarter. There was a huge decline in the second quarter of 2020 caused by the lockdowns. But in quarter 3 of the same year, there was an equally huge spike caused by stimulus checks. From the fourth quarter of 2020 to the fourth quarter of 2021, there were still small spikes showing that the economy did not return to trend. Of course, we know that although the inflation rate was spiking fast last year, the Federal Reserve did not stop quantitative easing, which contributed to those spikes. That's 6 quarters away from trend. Here's Chamath's explanation of what caused those spikes and what we can expect going forward.
Because of loose financial conditions, distort what true supply and demand should be.
Got it.
Right? And excess money can come from the government. But in this case, excess government money went from the government into the hands of individuals who then participated in the public markets, and they distorted what it all looked like. And so there was a lot of purchasing activity that was propped up by what seemed like an endless supply of free money.
Right. So we look at yeah, good.
And so now that money is getting taken out, we don't yet know what the real equilibrium economic growth rate should be, because you have to remember, we have not seen an era without federally introduced spending, without federally introduced forms of quantitative easing since the great financial crisis. So we have been propping up our economy for 14 years straight now. So we have distorted the prices of bonds and fixed income. We've distorted the prices of equities. We've created an asset bubble in crypto out of nowhere. And now we have to do the hard work of figuring out what the real supply demand is in the economy. And we don't know. If it took
6 quarters here, there's 6 quarters of just massive GDP spike there from the preceding quarters, and we have 2 down quarters. Is it going to take 6 quarters to wash this out, or longer, I guess?
No, longer, because what David said is now making the problem even worse. So because Powell was catering to whatever pressure he's been getting, and he must be getting some severe pressure from the White House, those were really dovish comments. But what is the problem when he is dovish? Well, the practical reality is a couple of things. Number one is typically the yields of long dated bonds go down. Okay. That essentially tells everybody else to reprice assets. What does that practically do? It makes the cost of borrowing roughly cheaper. Okay. It makes the price of equities, particularly ones that are far out on the risk spectrum. So specifically, let's focus on NASDAQ and crypto, right? Tech stocks, biotech stocks, and crypto stocks go up much more aggressively. So what has Powell effectively done? He has synthetically created a form of easing again, right? Like his job at the Federal Reserve, if you think about the money supply as a pipe, it's to shrink the pipe to close off demand to get things in equilibrium. So even though he's doing this, by the language that he's doing, he's effectively allowing market participants to basically guess that the worst is over and now we're going to start to expand the pipe again. And so they go to the end state. So what he effectively did in one speech is basically put a pin at the end of this year and is telling the markets, I'm mostly going to be done. And if anything, I'm probably going to be cutting in the back half of 23. Go on your merry way.
And there is no CP.
So the problem with that, Jason, is it's now pushing the problem out another 8 quarters. Like we need to stop this nonsense. He needs to be definitive and he needs to fundamentally break the back of inflation so that you find out what the true demand is in the economy.
Last week, just before the publication of the GDP figures, the White House published a blog rejecting the 2 consecutive quarters of falling GDP definition of a recession. Here is an excerpt from the blog. Official determinations of recessions are based on a holistic look at the data, including the labor market, consumer and business spending, industrial production, and incomes. Based on these data, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. What do you think? Is the White House just attempting another damage control, or is the U.S. in recession, as Sachs has explained? Please drop your replies below and give this video a thumbs up. Thanks for watching.